Hey, Colorado Springs. This is Jenny Bayless, and I am here with Jordan Malara, who is a real estate agent and investor. And he has a really interesting history and story about his real estate investing trajectory. So, wanted to have him on just to share some ideas for our audience and kind of talk about some nuanced topics. So, Jordan, thanks so much for coming on the podcast today.
Yeah, thank you for having me, Jenny. This is really exciting to me, and I'm excited to kind of talk through my investment story.
Yeah, I'm excited as well. So we'll just kind of start at the beginning. How you got into investing. The usual first question that we bring up for people.
Yeah, I don't think my investment story, starting from the beginning, really is different than most other people's. I started in a very traditional job. I moved to Colorado Springs with the military, and somewhere along the way, I read Rich Dad Poor Dad and maybe a handful of other real estate related books. And I just thought maybe this is worthwhile to at least try out. And at the time, everyone that I was working with bought a house around here. This was like 2017 of like fall of 2017. And so I was like, I guess we'll buy a house. So we bought a single family home, and I thought, yeah, I'll get into real estate investing by just renting this out when I go somewhere else with the military. And about 5.5 years later, I'm still here. I've moved several times, invested all throughout the Springs into different types of investment properties and classes. And so that's kind of how I got started. It was kind of just supposed to be a one-off thing that I kind of bought a few houses over time, and really it exploded from there.
Yeah. So I guess tell us a little bit about the first property. You said that you were going to turn it into a rental. Did you have any sort of framework in mind about what made a good rental, or was it just kind of throwing darts at a dartboard and seeing what sticks?
It was probably closer to just throwing darts at a dartboard and seeing what sticks, in that I didn't really know how to analyze a deal. So my idea of investing in real estate was like, okay, everyone else is spending, I don't know, 330 on a house. I'm going to spend a little bit less and get a little bit lower quality of a house, because maybe the payment will be a little bit better. I can add some value to the property, and my mortgage payment will be more easily covered by whoever comes in and rents it next. And there really wasn't much beyond that. I understood like the idea of accounting for vacancy, accounting for capital expenditures, but there wasn't a whole lot of analysis that went into the property. It was more, this is in a good location. It's a decent property that could use some work, and I think it'll work as a rental in the future.
Great. So you moved out of that. Is it still a rental? Is it still part of your portfolio?
We do still own that property. It's not close by any of our other rentals, but it's still a great long-term rental for us, and has appreciated over time. And we've paid it down and always had a renter in there, so it's a good property. I'm happy we
That's
bought it.
great. Yeah, that's awesome, and especially 2017. That's a lot has happened in Colorado Springs value wise since then. So I imagine that you're sitting pretty on that one.
Yeah, yeah, it seems unbelievable what we bought it for, now looking at current prices. But
Yeah.
that's I think that's the power of time, and I think that's really the value of real estate that people don't fully understand. It's not about when you buy it or whether the market's good or bad. It's just that you buy something and you just hold that property for a long time.
Absolutely. I love that you said that. You know, I I completely agree that a lot of the properties that like we bought back in 2016, 2017, and at the time I'm like, I don't know if this is a good idea. Like now I feel like I was a genius,
Yeah,
I'm
yeah,
like,
right.
we really thought it was a giant mistake 5, 6 years ago, but yeah, time makes things look a lot better than
Mhm.
so that's great. So going into your second property, did you have more of a intention, or I guess investment intention behind that one, or at what point did you start thinking about more of an investor focus on it?
Yeah, with the second property, so in between buying that first property, we ended up living in that first property about 2 years. And around like that 1 year mark, I thought, maybe there's more to this investing strategy. So I'll go to like a local meetup. And so I went to a meetup and met the guy that was running the meetup. And he ultimately persuaded me to really look at house hacking. And so that's kind of how we approached this next deal. And he was able to kind of walk us through all the numbers, and we approached it much more like an investment property. And that was immensely helpful, having someone come alongside me, teach me how to analyze numbers, how to look at what rental rates will look like, how to know what renovation costs might be on a property. Really understanding the full scope and picture of investing is really what I focused on for that second deal, which I don't think I would have done without having someone come alongside me. And so that was incredibly beneficial. And he ended up kind of helping me really get into investing. And it's someone that I still work with today.
That's great. That's great. So was it just a single family home, or was it, multifamily or ADU? How did you go about, more intentionally picking out this next one?
Yeah, I was pretty open as far as what the deal looked like. My only criteria was that I wanted to house hack the property. So we were primarily looking for duplexes based off of our price range,
Mhm.
but we were pretty open to any other options. So we ended up purchasing a duplex. It was down in the Ivy Wild area. There's a lot of like development going on. The Creek Walk specifically, it was kind of like right across from where this property was, and so
Oh, wow.
there was a lot of basically the projection of the area getting better. And so that was kind of a key factor in why we purchased down there. I wouldn't say
Mhm.
it was the nicest area, 4 or 5 years ago, but there was always this, you could follow the path of progress and know that this is going to be a good area down the road, even if it's not right now. And so that's really what informed our decision to move away. The first house was on the east side of Colorado Springs. We wanted to be closer to the mountains, closer to where there was really a restriction in supply on housing. And so then we made that move down to the downtown Ivy Wild district. So it's a duplex. It's got 1,800 square feet above and 600 square feet below. So my wife and I went from living in a 2,000 square foot single family home to a 600 square foot duplex. Um, a lot of downsizing, a lot of selling all of our furniture, a great exercise, and a lot of convincing it took to to get my wife to sign off on that. But we kept our long term objective in mind,
Mhm.
which for us was helping supplement her income so that she could stay home and take care of any future kids. And so that was really a big first step for us. But it showed us the power of investing, because by being able to downsize and live in that 600 square foot unit, we rented out the 1,800 square foot unit to someone through an insurance company. So their houses had burned down pretty significantly. It was
Mm.
being fixed up, and so they paid far above market rent to house that person for 9 months, and that person ended up staying a whole year actually, and that completely covered the mortgage. So we lived for free in that property, and I mean, we went from having a mortgage to now renting that other property out and living for free in this new one. And it was like this light bulb went off, and we're like, oh my gosh, real estate works, and it's real. And like, you can hear it all the time on podcasts, but this is like what people actually talk about. This is how it works. And that is just invaluable experience.
Yeah, sometimes you kinda have to, like, really go through it for it to click, because, like, conceptually, it's like, yeah, okay, I can listen to 100 people say, this is what they did, and, now everything's, amazing. But, yeah, I think it really, like, even just looking at a spreadsheet doesn't really, like, make sense until you're in the thick of it and you're, like, seeing the cash flow come in, or, in your case, living for free. I mean, that's amazing to not have to, dip into your bank account each month to live. So, um,
Yeah.
and I know that one of your, one of the things that we're planning on talking about today was kind of, sacrifices, for financial freedom. So, can you tell me a little bit about kind of what you think about, you know, the sacrifices you've made personally, or what you think that, investors just beginning might have to do in order to make their achievements and their goals?
Yeah, I think ultimately what everyone's goal is always financial freedom. It seems like, or at least some sort of autonomy of time, is
Mhm.
what a lot of real estate investors are chasing after. And it's easy to think that anybody can achieve that and can achieve it quickly, because we hear it on all of the big podcasts. But I think the truth is, and what I've realized is, to achieve financial freedom, especially at a younger age than most people are able to achieve it, or what other people are calling like soft retirement, you have to make sacrifices. And these sacrifices come down to a couple key components. It means, for one, I think house hacking is one of the best ways you can achieve financial freedom. But the sacrifice is you always have someone living nearby you. There's more extreme versions of house hacking where you rent out a room in a duplex, and so you're renting out like a completely separate unit, and then also maybe a spare bedroom, and so you have people all around you, or every bedroom in your house you're renting out. But there's also like some more tangible or some more less aggressive moves towards house hacking. If you had a house in a cottage or an ADU, you get some sort of separation from those people. You put up a fence. You're still taking a small bit of sacrifice because you are renting out a unit on your property, but it still helps supplement your mortgage. And so I think there's different levels of sacrifice you can take on. The higher level of sacrifice, especially when it comes to house hacking, you can take on, really equates to a little bit better of returns. And so then you can use those returns to grow quicker and quicker. For us personally, we could have chosen to live in the 1,800 square foot unit and rent out the 600 square foot unit in that duplex. That would have had a massive difference on our ability to save and cover the mortgage. And so we chose to make the larger sacrifice when we were young and when it doesn't matter as much, so that we can hopefully gain a lot more in the long term. So that's one of the sacrifices. I think the other large one comes down to being willing to sacrifice your time, because we want that time freedom in the future. So what if I sacrifice my time now? What if
Mhm.
I'm willing to work a job and then also work on fixing up a property, after I get done working? And so some people would say, well, you're just trading your early part of your time for your later part of your time. But that's a very linear way of thinking about time. And I think when we think about investing, it should be in an exponential growth way. And so just like our real estate grows in an exponential format, and just like the stock market or our other investments grow in exponential format, I think also our time can grow in an exponential format where we put in the time early on and then we reap the greater benefits of that in the future.
I completely agree. I completely agree with that sentiment. And it's hard when you're just starting off and everything just seems really, heavy, because you don't know what you're doing, you don't know what risks you're up against. And I mean, I completely agree in terms of, the time piece of it. I tell everyone that I think it's a really good idea for people to self-manage at first, because you are going to be just absolutely spinning your wheels, have no idea what you're doing. But after, a few iterations of it, you know exactly how to screen a tenant. You know exactly the move in, move out procedure to your house. Like, and then when you get to the point where you can outsource that time management piece of it to a property manager, you kind of have an idea. Like, obviously you're not going to micromanage the PM, but you have a better idea of what they should be doing, to effectively manage your asset, but while being able to remove yourself from that. So I think that what you just mentioned is like crucial for people to kind of accept, as a just kind of a fact of real estate. Like, it kind of stinks in the beginning. Like, you're not really making too much money. You're doing a lot of stuff that you don't want to do, but just wait a few years and then it all accumulates really, really quickly at that point.
Oh, totally. Yeah, I completely agree with you with what you said. And yeah, it does. I think in the beginning it's so hard because it's hard to be patient.
Hmm.
Everyone wants to see that explosion of growth so quickly. And the truth is, I think, we talked about this before, like real estate is a long-term game. It's a buy and hold game. And, in the beginning, in those first few years, it feels very slow,
Hmm.
but it's amazing how quickly we've been able to scale up our portfolio even after a couple of years, just through having more investments and being able to reuse that capital and keeping it moving forward and scaling up. And so yeah, sometimes you just got to be patient. You got to push through those tough times, and it doesn't feel worth it in the beginning, but eventually it will.
Yep. Yep. Exactly. So from your duplex, where are you now, and what did you guys do in between, to get to your portfolio?
Um, yeah. Do you want the The quick version or the long version? Like, do you want
Oh,
the
yeah,
scope of the portfolio, or do you want like where we went next, like the next property?
you can say next if it's,
Okay.
yeah, absolutely.
So the next one we did was a little bit more of a value add play. Ultimately, we were looking for another duplex or something a little bit larger. We wanted really a triplex, and it was a very competitive time in the market, and it was really difficult to lock anything down. So we started looking at some different creative ways of getting into real estate, or getting into the next property. And so one, I had kind of like a mutual friend. I didn't really know him that well, but he was converting a garage attached to his house into a whole nother unit, into what's known as an integrated ADU. And I thought, man, that sounds really cool. Like creating a whole nother unit. And I started looking at the numbers. And when I was looking at it, it's like, okay, a single family home is a bit cheaper than, say, a duplex, just because there's a scarcity of duplexes. So it does kind of bring some of their prices up a bit. And so I was like, well, if I can take this single family home and I can turn it into, if I can add this cottage, then I'm getting it for a good price and I'm going to put the value into it. And I was like, well, these things are appraising really well in the back end too. So I thought, well, maybe there's a chance I buy a single family home with a cottage or with a detached garage and I can convert it into an accessory dwelling unit. And so that's exactly what we did. We found this, it was a mediocre single family home, to be honest. It wasn't anything great. And we ended up we wanted to target the short-term rental market on this specific property. It was in Old Colorado City, and we just thought, we've seen people have great success with this. They get, higher than average cash flow. So why don't we give this a try? And so we ended up buying a single-family home. It was a 2-1. We made it into a 3-2. So we took the basement, added a bedroom and a bathroom, made that a short-term rental. It had an exterior entrance from the back. And so we kind of separated it off from the upper unit. My wife and I lived in the upper unit. And then over time, over the course of a year of owning that property, maybe a little bit less, about 9 months, we converted a small 350 square foot garage into an accessory dwelling unit. And then that became another short-term rental unit.
Wow. So
Um,
you squeezed a single family home into effectively 3 units.
yeah, that's right. Yeah.
Wow. So, I mean, that takes a lot of creativity, I think, and vision to be able to do that. How are you guys renting that out currently?
So we moved out of that property this past year. And because of the short-term rental regulations, we had to change that up a little bit. And
Hmm.
so now there's 3 medium-term rental units in that property.
Okay.
And so because it wasn't eligible for a short-term rental permit, we ended up just going the medium-term rental route, and that's worked out really well.
Yeah. Yeah. So you moved out of that one. Where are you at now?
So then we purchased another investment property that we didn't live in this past year.
Okay.
Um, I don't know if you want to talk about that one a little bit.
Absolutely. Yeah.
That one did qualify for a short-term rental permit.
Okay.
So we purchased that one with the intent of turning it into a short-term rental.
Hmm.
And that was another house that had a larger detached cottage or a detached garage. It was about 720 square feet. So we converted that into a 2-bedroom, 2-bath cottage, and then remodeled the whole main house. And so that took us about a year. So we bought that one in February of 2021, and it basically just, or sorry, 2022, and it just got done this December.
Wow.
So both units are up and running on that one. That's been really fun.
Was
Just
was that one hard to find, hard to acquire, just based on, as you alluded to, the short-term rental regulations are really, really tight here. So I didn't know how you guys lucked out on finding something within the radius rule and all that.
yeah, they are very tough to find.
Mhm.
Um, to be honest, I just kind of stumbled upon the property. It had fallen out of contract, and so it just popped back up on the market. And it was probably, I don't know, I was like scrolling in bed one night, and I was like, oh, I wonder if this is eligible, because when you look at these specific properties, obviously like the more denser regions are the downtown area for those permitting. And this was kind of, it backed up to open space.
Mm.
And so there was no houses out and around the back. And I thought, man, this is like a pretty high chance. There's only a few houses that are really within the radius of 500 feet for this specific house. And sure enough, I checked the next day and was eligible. And so then from there, we just jumped on it as quickly as we could. And
That's great.
Yeah, we kind of lucked out. I don't know if we beat the competition to even recognizing it, or if, I don't know, how we lucked upon it. But it was really just a great opportunity that we were able to kind of hop on right away.
Yeah, I think, I mean, my guess would be that, yeah, because you guys had kind of, the radar for what you knew what you were looking for is kind of what I'm getting at here.
Yeah,
You saw more value in this property than perhaps someone else did. So I think
that,
that
that's very
probably,
true.
yeah.
Yep, and our appraisal showed that too. The appraisal came in a little bit lower than what we paid, or it came on lower than what we were willing to pay. Um, but that's kind of maybe the price, you could say, of the permitting of that specific property. So
Yeah. So I imagine, kind of skipping ahead, you said you just finished it, not too long ago. Did you get it reappraised at that point, to do any,
yeah,
sort of cash out?
yeah. So it's kind of an interesting deal. So essentially, we purchased with hard money in the beginning
Hmm.
to actually do all the renovations. So I don't mind going through the hard numbers if you don't mind.
Yeah.
But basically, we purchased for 465, and the hard money loan was 10% down and 10% of the renovations we had to bring to the table, and then
Okay.
they funded 90% of the purchase price and 90% of the renovations. The total renovations ended up being about 175 to convert the garage and redo the whole main house. Um, and then we ended up doing a refi, so it reappraised. We bought it for 465, put all that money into it, and it appraised in December for 775. So that meant we were able to basically not have to put any more cash into the deal, besides the basically the 10% of renovations and 10% of the purchase price that we put into it. And so that was 25% basically to buy out of that loan. So it came in perfectly. So it was a really awesome deal to not have to bring any more cash to closing and to appraise at that price.
Yeah, I feel like you, had to get paid in equity for your your headaches that it sounds like you were facing. So yeah, that's great that you're able to pull that one off.
Yeah, yeah, it was a blessing.
Yeah.
So
So
from there,
yeah.
yeah, so we ended up just buying a new house in September of this past year. This specific property, um, it already had a detached cottage on it, and it was kind of interesting. This specific property, my wife's cousin found on Facebook, and so so she texted it to my wife. She said, "Hey, I know you guys have a couple houses with cottages. This one has a cottage." It was just some wholesaler trying to basically sell the property. And so we got in contact with the wholesaler and found out kind of what the property address was, what kind of condition it was in. And kind of through some working out and working with the wholesaler, we found out he didn't actually have like any right to list the property, except like, I can't even explain the document that was used to. It, it basically gave him no legal standing to like exclusively list the property, and so it gave us the ability to go kind of knock on the seller's door and ask him, is there a chance you want to sell to us? The seller wasn't home, so I knocked on the cottage's door, and they gave me his number, and I called him, and he's like, "Oh yeah, like I just gave that guy some like the ability to market my property because I'm thinking about selling, but I'm not really tied to selling it." I was like, "Well, I'd love to work out a deal with you," and so worked with the seller for, I don't know, probably about a month to kind of refine what he wanted for the property and figure out a way to purchase it at the price that made sense for us. But the property was really interesting and intriguing to us because it had the cottage in the back. So we love the cottages, because we always want a house hack.
Hmm.
And then it also had three entrances to the house on different levels. So in the back, in the rear, there was a deck that went up to the second story level. There was the front door for the main level, and then there was a entrance in the back to the basement. So what that meant is we could separate the house into basically two other short-term rentals, one above us and one below us, and we could live on the main level. So basically, we'd have three short-term rental units on this specific property. So that was pretty cool, pretty unique, and something that drew us to the property.
Have you guys finished conversion of that property to?
Not, yeah, not quite yet.
Yeah.
So the basement unit is up and running. It's a little studio, Airbnb or short-term rental, and then the upper unit doesn't have a shower upstairs, so we're in the process of adding a shower, and then that one will be good. And then we're waiting on the tenant in the cottage to move out because it came with a tenant. They'll be out in end of April, so then we'll transition that one for the spring and summer season.
Okay. So so based on kind of your how you've described your portfolio, it sounds like you have mostly short or medium term rentals. I guess you have one or three units that are I wasn't sure the duplex
Yeah,
what you guys are doing on that, if those are long term or
the duplex is long term.
okay.
Yeah.
Okay. So you guys have a really wide array of strategies. That's fascinating to me. Like I am such a cookie cutter, like all of my whole portfolio is long-term rentals because that's what I know to do. So I love the fact that you guys are like, taking what the market's giving you and adapting your strategy to fit that and to, get the most optimized cash flow in those situations. Was it hard going from long term to short term, medium term, or was it pretty easy for you guys to just be able to pivot? How you guys are running out the properties?
Um, I would say it was hard, but not as hard as it could have been.
Mhm.
So I got connected with some people that were doing some short-term rentals already when we first started entering that market, and through meeting them, they were. I mean, it's across the investor community. Everyone just wants to help each other, and
Yeah.
so these guys were just so willing to share all their like secrets and tips and kind of what they've learned over the years. And being able to leverage that knowledge really made it a lot easier on my wife and I to get into the short-term rental space. And there's always hiccups. There's always things you figure out along the way. And especially with medium-term rentals, it was even more of an unknown space where we didn't know a whole lot of people that were doing it, but we knew we could figure it out. We honestly, my wife and I, we believe that we bet on ourselves and we can figure it out, and we know we're surrounded with great people that are willing to help out too. And so I think that went a long way in helping us to implement a short-term rental strategy or a medium-term rental strategy when we had really no experience in it. And so that's what I love helping people do the exact same thing now because I would be nowhere if it wasn't for the people that helped me get into real estate and any sort of investment strategy. And so I think people need to realize that real estate is not a single person's game. No one can do it alone. It's really the benefit of everyone to the benefit of everyone if we all help each other.
Yeah, absolutely. And I mean, what you're looking for isn't necessarily what the next person's looking for, and vice versa. And everyone kind of has their own niche that they like. So, I mean, there's literally no harm in helping each other. I think,
Mhm.
everyone's going to grow in this. And so, yeah, that's fantastic. And I'm guessing that you guys have a um, pretty good like system set up for your shorter stay rentals at this point. Just kind of
Yeah,
getting over that hurdle.
yeah, those are definitely crucial. And to be honest, just like we've diversified in our rental portfolio, we've diversified in how we manage our properties too. So for like our long-term rentals, we actually handed those over to property management about a year ago now,
Okay.
just because I think it just fit in line with more of what we were looking for and what we enjoyed. I think there's an important aspect of doing what you enjoy in investing,
Hmm.
and oddly enough, I enjoyed the short-term rental management more than I enjoyed the long-term rental management. I think that's mainly because when you hear from a long-term tenant, it's usually something bad. Hey, something's broken.
Yeah.
Um, with a short-term rental guest, you might hear, "Hey, like we loved our stay. Thank you for hosting us." It's like, wow, that's really nice to hear. And so you're hit with more like positive feedback, I would say most of the time, than negative feedback with a short-term rental. Um, and so that kind of has helped us immensely. And then we also actually handed over some of our short terms, some of our larger units to management as well,
Okay.
because those units are a little bit tougher. But then for the rest of the ones that we manage, yes, it's all systematized. So pricing software, management software, and then we even have a cleaner who helps like manage inventory and things like that. So we pay her a little bit extra to do, make sure all of our units are cleaned and basically manage the other cleaners. And so without that stuff, without those systems in place and the people, it would probably be a massive headache. But with those systems, it becomes much more manageable and allows us to still have time to continue to take on other projects.
Yeah, I think just kind of picking apart some of the stuff that you said there, like I love that you guys were able to identify which properties or which property types you wanted to self-manage, which ones didn't want to for whatever reason that might be. I think I think that it's smart and that you're able to recognize that. But then also I think that it has a lot to do with the fact that we were just talking about. You put in the time in the first place to get your portfolio to a place where you can be more selective as to like what it is that you're working on. So I think
Mm-hmm.
that, I'm guessing in the beginning, you probably wouldn't have had that luxury, or things would have been really tight if you did.
Yeah. Yeah. The growth in rental rates and long-term fixed rate debt allows you to have a bigger gap over time. And so, yes, that did allow us to then consider property management. Whereas in the beginning, there's no way we would have been negative. It wouldn't have
Yeah.
made sense. And I think, like you said, there's value in learning how to manage, so
Hmm.
that then you can then screen a property management company and judge kind of their effectiveness as they're working for you.
Yeah. And now you're able to dedicate more of your time to uh, performing the rehab and making that process complete, especially for the property that you're in right now, which in turn will just have more assets working for you, more
Hmm.
more cash flow, and you'll be able to just kind of scale from there. So I think that it's really neat that you're at a place now where you're able to kind of pick and choose what your time is best spent on the highest production value of that. So I think that's fantastic. Where are you guys right now in terms of your portfolio? Like, are you looking to buy any properties outside of a house hack? How many house hacks do you guys want to do? That sort of thing.
Yeah. My original plan was 10 units, 10 years. We're at 10 units and we're at about 4 years. So I think that's me not understanding exponential growth, kind of like we
Hmm.
talked about, not understanding like how quickly scaling could happen. I think right now I'm not necessarily looking to purchase anything. Our main focus is to get the units that we need to get up and running, and live.
Hmm.
And I think I've put off a lot of stuff over time. So there's been like in our duplex, we have the ability to add like a bathroom and a bedroom. We saw that potential from the beginning. We didn't have cash to execute on that stuff. And so I think right now it would be nice to kind of look at places where there is room to add value in our own portfolio and
Yeah.
in the properties that we already have, and look to kind of execute on some of that for the time being. And then just take care of, maintenance around these properties that, this stuff adds up over time. And I don't want to just continue to be in like a growth mindset for too long. I want to also preserve and protect what we have and continue to reinvest into our own properties. And so right now we're leaving a little bit of a growth period because we're a little bit ahead of our goals to hopefully optimize our portfolio, and then we'll kind of switch back.
I love that you guys are doing that, just from a selfish point of view, because that's kind of where I'm at as well. Like I feel like every couple of years I like to press pause and make sure that like the assets that you've accumulated over the past couple of years, that you make sure that they're as protected and as strong as possible. And like you said, you're identifying opportunities within your own portfolio that is probably going to give you a better return than if you were to go buy, a new property. Like if you were to just improve what you have, put a couple tens of thousands of dollars into that, and you're able to increase your rent, because of doing that. is probably a better use of your cash than just, going into a whole new project and all the unknowns and everything related to that. So, yeah, I'm with you on that. I think that it makes me feel better, at least, doing that, pressing pause for a minute and making sure that, you're not going to get the rug pulled out from underneath you, if
Mm-hmm.
something happens. So, that's fantastic. And congratulations on meeting your goals so quickly.
Thank you.
That's amazing to like do it in half the amount of time that you originally set out to do. So, yeah, you don't really hear that too often. So,
Yeah.
um, what are some tips that you would give to newer investors, just either mindset or tactical, or just anything that you kind of wish that you knew five-ish years ago when you started?
Um, yeah, I think some of that would come down to, and I think it gets said a lot, but one of the things that I think every investor needs to realize is that you don't have all the knowledge when you're starting out, and that doesn't mean you can't invest and get started. So many times, investors just want, like newer investors, they want to have all the answers. They want to know exactly what's going to happen when they invest in real estate. And the truth is, you don't know. You
Hmm.
learn by actually doing it and experiencing it.
Yeah.
You can read as many books as you want, and pretend you know as much as you want about real estate. But the truth is, like, you don't know anything. You don't know how to screen a tenant until you actually go through the process and do it.
Yeah.
And there's going to be hiccups along the way. You're probably going to do a bad job, and you're probably going to put someone into a property that you shouldn't have. I've done it. I've made so many mistakes. But I think when I look at what really separates me from a lot of other people or a lot of other investors is I'm willing to take on the risk that I don't know everything, but that I believe that I can figure it out. So, yeah, I've placed a bad tenant before. Well, what are my options? How can I get them out? Or like, what are some different things I would do differently next time? And so I think being a person of action is really important. Not I don't want people to just like jump in without knowing anything, but if you surround yourself with the right people and just know that, like, yeah, you're not going to have all the answers, but you can figure it out. I think that should be enough to kind of get you to invest in real estate and be successful. So I think
Absolutely.
the biggest thing for new investors is just getting started. You just have to do it
Mhm. Methodically. Yep,
methodically. Yeah.
yeah, I totally agree with that. And I mean, um, do you stay awake at night thinking about your bad tenants or, your mistake that you made? Probably not. Like you
No.
probably are just fine with it, and you will be fine with it. And I think as long as you are accepting of the fact that it will happen, like no matter what. And you might make a mistake tomorrow, and you're an advanced investor, so it's like you're just going to keep making mistakes. Is what I'm trying to get at, and
Yeah.
it's not a big deal. Like you just have to assume it's going to happen and learn from it and adjust.
Yeah. And I think that goes like kind of building off of that. With every real estate transaction I've ever done, I've been, like, scared or nervous about some part of it. Like,
Hmm.
there's always some unknown. It's not like after purchasing 2 properties, I'm like, "Oh, I know what to expect." I mean, even, I bought a house and converted a garage. I did it twice, and the second time I was still terrified and still didn't know what to expect, and there's still so many unknowns. Like, just because you've done something so similar doesn't mean it takes that, like, that discomfort out of it. And so you have to kind of embrace the discomfort of it all and just, yeah, just kind of move forward methodically,
Hmm.
kind of like you said, and just continue to invest. And I think that's really what separates a lot of different people.
Yeah, and I think that because like the stuff that you guys have done with your portfolio is incredibly impressive. Just even is the creativity alone on it, and I think as you mentioned, the discomfort that's associated with it. It's like I think that's why you're able to achieve the returns that you've achieved and the growth that you've achieved, because you've done something that's hard. If it weren't hard, everyone would be doing it, and there would be no growth or return opportunity in that. So, I think that is just, um, yeah, I think that's something that a lot of people might be naive to. It's just
Hmm.
that, it's going to be hard. And you're just going to have to suck it up and get through it and keep pressing forward. So,
That's right. Yeah.
so that's great. Yeah, I mean, your story is just absolutely fantastic. I'm very impressed with all the creative things that you guys have done. And, um, I think you and we have similar philosophy, but completely different execution strategy on it. So that's kind of the fun part about real estate, I think, is that there's no one way to do it, and everyone kind of has their own preferences for how it's done. And, you probably we get to the same endpoint at some point, together. So,
Hmm.
I really appreciate you coming on and sharing your story and everything that you guys have done to get where you're at. And yeah, if there's anything else you think that our audience should know, just yeah, feel free to mention it. But where can people get a hold of you? Where can they reach out to you? And we'll include it in our show notes as well.
Yeah, probably the easiest places are probably Facebook, Bigger Pockets, and LinkedIn. I'm not a huge social media person, to be honest. So I'm not like on Instagram. I'm not on TikTok. I'm on just some of like the older platforms, I would say. Or you can always email me too. But yeah, those are probably the main ones that that's probably the best way to get in contact with me.
Great. Well, thank you so much. I really appreciate you taking the time to come on and share your experience. And we'll have to have you on again, in the future.
Yeah, thanks, Jenny. I appreciate the opportunity, and this was a blast. So thank you.
Thanks, everyone.